Hello and welcome to the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Steve Freed, our VP of Grain Research, and Alan Bush, our Senior Financial Economist. Let's start with Steve. Steve, the grains may be in ranges until the USDA crop reports. What is offering support and resistance?
Well, I think in all three, offering support is unknown about crop conditions and weather. We've kind of beaten prices down pretty hard, and I think that the market is trying to find value going into the key reports in the summer weather. And I think that all three have resistance because of the recession. And I think corn is following a little bit the lower crude oil market. I think most people believe that eventually we will take out resistance if U.S. demand improves and if the crops are a little bit smaller. We got word today that Europe started buying U.S. corn. So if they drop the GMO issue, they need corn. They might buy from us. China's back buying U.S. soybeans, although very small quantity. And we're still trying to figure out how much wheat Russia will export. We think it's going to be less than what the USDA is saying.
Does the fear of inflation and recession have an impact on speculative buying in grain futures right now?
Yes, I believe it does. In May, combined managed fund long corn, beans, wheat, meal, and oil was 800,000 contracts, almost a record high. Now it's 300,000 contracts. So they've liquidated out during that time frame. Number one, after the Fed said they were going to increase rates. Number two, just some technical selling as the market went down. And number three, just real no concern about weather. So again, I think they'll wait until the September report before they jump back in on the long side.
And finally, Steve, what is the latest weather outlook for the United States, the EU, and Russia?
I think the United States has gone along, especially in the northern Midwest and eastern Midwest, with favorable crop conditions. There is dryness in the southern plains. So in the next 2 weeks, the maps show areas of southern and western Iowa, northern Missouri, Nebraska, Kansas, and west central Illinois being drier than normal. This could bring down a little bit. If Kansas and Missouri lost 10% of their corn yield, it'd be worth 3 bushels per acre for the entire U.S. corn yield. It's interesting that Europe's been dry up to this point. There might be a few showers in Western Europe, but long term, they expect to be warm and dry, which is causing shortness of water, like in France, and the Rhine River is unnavigable right now. And what's interesting is that late this week, Russia is going to have one of those rare, dry, warm, windy conditions called the Shukovay, which could hurt crops there.
All right, moving over to the financial markets. Alan, what are the most important economic reports scheduled for this week?
Well, I think the most important report is Wednesday's July CPI number. That's expected to show a 0.2% increase. That compares to the June figure of up 1.3%. Also, year to year, the CPI is anticipated to be up 8.7%, and that compares to last month's 9.1% gain. So I do think we have seen peak inflation, seeing a lot of the industrial commodities coming under pressure overall. So it's the CPI to watch, and of course that's out Wednesday, and at 7:30, the guess once again up for up 0.2%.
Okay, what are the main fundamentals driving stock index futures now?
Well, first of all, it's the hawkish Fed that actually has become more hawkish in recent days. Now it looks like they're mostly on board for another 75 basis point hike in rates. However, we are seeing earnings coming in better than expected, so that offsetting to some degree. So seems to be a battle between the bearish influence of a tighter Fed and better than expected earnings reports.
And last question, Alan, what is the outlook for the industrial commodities?
Well, as of late, we have seen industrial commodities coming under quite a bit of pressure. Also, we are seeing the yield curve very much inverted. That would suggest that the global economy is likely headed for a downturn. For example, we already had crude oil declining $27 since June. Gasoline was over $3.90 a gallon, now at $2.89. Even copper peaking at $4.58, now somewhere near the $3.60 area. So industrial commodities have already come down quite a bit. And I think if the global economy slows, which I think it will, we'll probably see all of these trends continuing. That would mean lower crude oil, lower gasoline, and lower industrial metals as well.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you would like more information about our brokerage services, please visit admis.com. Thank you.